and welcome to Olymp Trade. My name is Angie. I am a financial analyst with Olymp Trade, and today is part 4 in our series about Forex. Today we are going to be discussing money management, a really interesting topic, very important for all of our traders to know and to understand. First of all, let's go ahead and check the sound and the picture to make sure that you can hear me and that you can see me well. Please go ahead and let me know in chat if everything's okay with the sound and the picture. You can simply put a plus sign if you can hear me and if you can see me well. I love to hear where you guys are joining us from. I do see hello from India from VR Money Farmer. Daniel is tuned from Kenya, Africa. Hello, welcome. Let's see, who else do we have in chat today? Jafar says, today was my second day and I made good profit with the help of technical analysis. Fantastic. Anthony Amon is joining us from Nigeria. Hello. Fantastic, great. Let me go ahead and switch to here. So once again, my friends, today this is part 4 in our series about Forex. Once again, today we are going to discuss money management, and in our previous streams, we discussed first basically the overview of the online trading platform, how to start, where to find everything. Then we had a stream on fundamental analysis, which is macroeconomic data and also like the economic calendar and different speeches and releases that have an effect on the different assets price movement. Then we had a stream about technical analysis, and I want to let you know that all of the links are in the description of this video. I want to go ahead and I see everybody in chat. Powerful Messenger is from UAE. Let's see here, Nature and Culture from Jayanta, India. Dixit, hello. Not here, hello. Everybody, hello. Once again, thank you so much for joining and for letting me know where you guys are joining from today. Also, if you can, please let me know in chat if you are new. Simply type new if you are new. So for the fun part, of course, let's go ahead and give you your promo code for this week. The promo code is SAFE, and then the number 34. You have it displayed on the chart right now. Basically, this is going to whenever you are making your deposit, you can use this promo code, and this will add plus 30% to your deposit. This promo code works until next Monday, which is going to be the 11th of May. Once again, it is SAFE, the number 34, and the promo code is valid until next Monday, May the 11th. Krishna is new, Jafar is new. VR Money Farmer, I'm doing great. Thank you so much for asking. How is everybody doing who's joining me from today? That was funny. Alrighty, so also for everybody that is joining us for the first time today, please make sure that you are subscribed to our YouTube channel. Go ahead and click on the red subscribe button. Give me a thumbs up, show me your support, and of course ring the bell so you don't miss out on any important and new notifications. You'll get reminders whenever we're starting our live streams. So definitely don't forget to ring the bell and make sure that you are subscribed to our YouTube channel. Now let's go ahead and basically start with our topic for today. My friends, you are welcome to join in chat, of course. My colleague is going to help me answer in chat, and I will, of course, join you at the end of the stream to see how everybody is doing. Just a quick little recap about the advantages of the Forex platform, basically the trading instrument. You see, we have two streams a week. One is in the beginning of the week is more based on FTT, which is fixed time trading, and the second part is on Forex. So what are the advantages of Forex? Now, for one thing, with Olymp Trade Forex, there has no spread. Basically, the price that you see on the chart is always going to be the price of the trade opening and the trade closing. So this is a really great advantage. There is a commission charge for opening the trade, and you can see the commission before you open a trade on the right hand side of the platform where all the parameters are. And I showed you this on our previous streams. Also, there is no double rollover commission on Wednesdays. Rollover commission is the interest rate charged for keeping your trade open overnight. And this is a major benefit for those who keep their trades open for several days. Also, there is no time limit for keeping your trades open, and you can keep your Forex trades open indefinitely. And this is also a great advantage for swing traders and for position traders. And don't forget that our future streams, we have 4 more streams coming up. We're going to have streams on the different trading styles. So next week, we are going to speak about how to make your trade profitable, followed by day trading, like intraday trading, swing trading, and position trading. I have included the links to those future streams in the description of this video as well, and you can actually set yourself a reminder so that you don't miss it. Before we proceed with the stream, I do also want to remind you guys that to let you know, please go ahead and leave your comments below this video. After the webinar, after the stream, the video will be uploaded to our YouTube channel. So just visit the video once more and leave your comments below the video. Make sure to include your ID number. And next week on Tuesday, which is going to May the 12th, we're going to continue our series on FTT, fixed time trading. And we're going to choose a random comment and give out a risk-free trade. So my friends, please don't forget to leave your comments below this video, and don't forget to include your account ID number. Now let's go ahead and start with my presentation. Basically, what are we going to discuss today? What is money management, and why is it important, and what amount to trade with? What is risk management, and why is it important, and where to set your basically like stop loss and take profit? And we're going to discuss like some common mistakes and tips for trading. Now, let's go over some rules. So you start trading with Olymp trade, and you open the platform and you're thinking, okay, you make a deposit, and you said, well, how much do I start trading with? Do I trade with the whole amount? Or do I trade with like half of my deposit amount? What do I start trading with? Basically, there are some rules that we can follow. And the rule is that traders should use from 2 to 6% of your account balance for your trades. This means that if you have $10,000 on your account, then each trade should be from 2 to 6%, which is $200 or $600. If you have $1,000 on your account, then your trades should be between $20 and $60. And if you have $100 on your account, then your trades should be between $2 and $6. It is also advisable for beginner traders to actually start trading with 1% of their account balance, so from their deposit. So take note of that. Now, another thing that we can do is also trade with a fixed amount. Basically, you just have to, for example, you decide to trade with 2% of your account balance, and each trade that you open is going to be for, let's say if you have $10,000 on your account, let's say you enter your trades for $200, and each trade you keep opening with the same fixed amount. You never change the amount. And what you can do is you can increase this the fixed amount of your trade once you increase the capital on your account. So once you increase your deposit. So for example, so you start trading with the $10,000 with 2%, $200. Once you grow your deposit to $15,000, your 2% is going to be $300. So just basically set some limits and set some targets of where you can increase. Same scenario if you are trading with $100 and you trade with 2%. And basically, once you increase your deposit amount to $150, the 2% is going to be increased to $3. So basically, set some targets because this is a part of your plan and part of your strategy. So there are different ways that we can choose the amount of our trade. But don't forget that we can use from 2 to 6% of your account balance. Beginner traders may benefit more if they start trading with 1% of their account balance. And you can also choose a fixed amount to trade with. The next thing that we can also do is that we can basically, we don't have to enter all at once. We can enter in steps because we don't have to rush. And basically, what I mean is, for example, let's say that you want to trade with 3% of your account balance. Well, you don't have to, enter the trade with the whole amount at the same time. And basically, what I mean is that basically we have a downtrend right here. And we can open our first trade right here with 1% of our account balance. And once, because, for example, the price has moved below the moving average, then we see that the moving average has crossed the faster moving average, crossed the slower moving average to the downside. We can enter our second trade with another 1% of our account balance. And as the price is moving along with the trend and moving down, moving in the direction of our trades, we can open a third sell trade, for example, for this scenario with another 1%. So once again, don't rush and enter the market in stages. Cartoon animation, hello Angie. Let's see here. Now, once again, I'm going to come back to chat a little bit later. Now, the next thing that I would like to tell you is about a Russian American teacher and professional trader by the name of Alexander Elder. And basically, he stated that beginner traders are often characterized into two groups: sharks and piranhas. I hope you like my animation. Oh, cartoon animation. I hope you like my animation. Basically, as you know, sharks, they tend to bite off big pieces. So these are beginner traders that enter trades with large sums and portions of their deposited amount, not realizing that what they lose, they have to make back twice as much. So basically, sharks just enter the market with big amounts of their deposit. And then we have piranhas. And piranhas, as you can picture the fish, they tend to bite off little pieces. And these traders, basically what they do is they enter too many trades. And what happens here is that they basically overtrade. They end up paying too much in commission, and also their trades are of less quality. So my friends, don't forget, don't be a shark, don't be a piranha. Enter your trade. Your trades should be between 2 to 6% of your deposit from your deposit, and you have to stick with this rule. This is a part of your plan. This is a part of your strategy. So please decide on the amount and then stick to it. It's important that we have to have our plan and strategy, and we have to follow it. Now, another lesson that by Alexander Elder is that if you lose more than 6% of your account balance, then you need to take a break. And I do mean quite literally, just turn off your computer and take a break. Once you, I don't know, you can go outside, have a walk, or do whatever is pleasing to your mind. And once you have a clear head, you come back, you need to analyze your mistakes, reanalyze your plan and your strategy, see what you can basically adjust, and then get back to trading. So it is very important to realize when we are losing control of our emotional stability, and we just need to stop and take a break. Have a cup of coffee, go for a stroll, do something relaxing. Now, let me go ahead and switch my screen a little bit so that it's not covering. Go to this upper left corner right here. Alrighty. Now, the next thing that we're going to discuss is stop loss and take profit. Another great benefit with a limb trade is that you cannot lose more than the amount of your trade. So your stop loss can't be more than the amount of your trade. It can be less than the amount of your trade, but we are going to discuss this on our next stream. How can we, where can we place our stop loss? Basically, you can set your stop loss by using the local maximums and minimums. We can also use, for example, trend lines that act as support and resistance in price channels. And also, in some cases, we can use the moving average, for example, which also acts as a level of support and resistance. Since I just said, trend lines, resistance, support, I highly advise you guys to watch our my stream on technical analysis. And because we go over a lot of these things and how to use them, the moving averages, the trend lines, these are very, very crucial in our trading. So basically, in this example right here, what I would like to show you, so you realize that there's kind of like a reversal to the downside. We have the end of an uptrend, so the price is starting to move down. We see that the price has moved below the moving average, so we enter our sell trade right here. And we can set our stop loss above this local maximum, this last maximum. Now, this next scenario, let's say we didn't enter this trade, we waited for the moving averages to cross. So this is another sell trade opportunity, and we can set our stop loss slightly above this basically this 23.6 Fibonacci level. Fibonacci, we also have some videos on Fibonacci. Oh, it's fantastic, fantastic trading instrument, indicator, excuse me. And just a quick little recap, whenever we have the end of a trend, it could be a reversal or it could be basically a change in trend. But our support and resistance levels that Fibonacci, the Fibonacci indicator helps us with is the levels of 23.6, 38.2, 50%, and 61.8. So basically, I do have my grid here, and once the moving averages cross, I enter my sell trade, and I can set my stop loss slightly above this level, which also coincides to slightly above this moving average as well. And once again, and also we can set our take profit by using these Fibonacci levels, which are basically just horizontal levels of support and resistance. Even if you put on your Fibonacci levels and you enter horizontal support and resistance levels on these same lines and you delete the Fibonacci levels, you can check back in history and you can see that these levels are actually very valid and they work back in history. Also part of technical analysis, so don't forget to watch that. So basically another sell trade right here. Our stop loss could be slightly above the 23.6, and our possible take profit will be the next level, which is the 38.2. Well, I have my more take profits here, but basically, we can set our stop losses by the previous maximums or previous minimums. We can use the moving average for our stop loss and take profit levels, and also trend lines. Now, the next thing that I would like to show you is to tell you about the multiplier. The multiplier is a financial service that allows to increase the size of our trade by a factor of 50, 100, 200, or 500 relative to the amount of our trade. Basically, on some instruments, the multiplier is times 10 or times 20, for example, on some cryptocurrencies. And what I would like to show you here, I have the example of this chart. Basically, once again, we had an uptrend that turned into a downtrend. So I'm going to show you two examples. I'm going to show you one example with the 50 multiplier, the minimum multiplier, and I'm going to show you one example of the using the same trade amount, same chart, but with the 500 multiplier. So this is what I would like to show you. So I have we have a downtrend. The price is moving below the moving average. We just crossed the 61.8 Fibonacci level. By the way, once the price crosses this 61.8% Fibonacci levels, we can delete the Fibonacci levels because they're not valid any longer. We have a change in trend, but that's a different story. So basically, this is a trade with $200 and using the minimum multiplier of 50. Now, pay attention, my friends. I mentioned that our stop loss is going to be automatically set to the amount of our trade. And you can see that my stop loss is all the way up here. So that is all the way up here. What does this mean? This means that if the price decides to move against the direction of my trade, so I entered a sell trade. If the price starts to move up, my trade is not going to close, and I'm not going to, basically, my trade is not going to close until the price reaches this level. And this is where my trade will close, and minus $200. Now, don't forget, once again, I'm just really excited about the profitable, how to make your trade profitable. That's going to be next week. I'm not going to spoil the surprise. We can minimize our losses by adjusting our stop loss level. And I want to show you that I've set my take profit, which is down here. You can see it. And it is, pay attention to the amount of the take profit. And that means, what does take profit mean? That means once the price reaches this level, it is going to close automatically, and it's going to collect our profit. So basically take the profit. And as you can see here, once the price reaches that level on the bottom, I would collect and make a profit of $115. Once again, this is a trade open for $200 using the 50 multiplier without adjusting the stop loss. Now check this out. So the same kind of trade, but using the 500 multiplier, the maximum multiplier. Same exact chart, same exact situation. So I entered it right here. But as you remember, previously our stop loss was all the way up here. So if the price basically moved up here or even up here and then started moving down, I would still be in the trade. And if it starts to move down along with the direction of my trade, I can still gain profit. So I have all of this room, how to say this, for my trade to breathe. So once again, so with the $200, but using the 500 multiplier, check out where the stop loss is. It's all the way, it's very, very close to the price, the current price. And this means that if the price chooses to move in the opposite direction, once it reaches this level, I will lose my entire $200. But there's the flip side to the coin. Check the bottom of the chart where my take profit is, and the take profit is basically in the same amount as our previous slide, as you can see right here. And we can see that the take profit, instead of $150, is now potentially $1,204. Now that is a big difference, but we have to understand that when we are using a higher multiplier, there is higher risk, but a higher potential profit. The minimum multiplier minimizes our risk, but also we have potentially a lower profit. Okay, now another thing, the next thing that I would like to basically kind of show you and speak to you about is called the risk to reward ratio. And this is kind of basically like where what we should aim at when we're setting our stop loss and take profit. It is advisable that our risk to reward ratio should be 1 to 3. That means for every $1 loss, we should make $3 profit. So if my stop loss is minus $100, my take profit should be plus $300. Now, it kind of varies on the situation on the market. If there is a trend on the market and there's like a big movement, and then we should aim at our risk to reward ratio to be 1 to 3. If we are working more in a flat market, basically like when the market is moving sideways, then we can aim at for our risk to reward ratio to be 1 to 2. Let me explain what I mean. And this is actually the same chart, same situation. And this is where I didn't choose the minimum multiplier of 50, but then I didn't jump in with the whole, with the 500 multiplier. And what I did was basically I entered a sell trade with $200 and a 100 multiplier. Remember that we can adjust this whenever we're opening our trade. And I have adjusted my stop loss down which is going to be slightly above the moving average and also slightly above the 61.8% Fibonacci levels. And well, basically, you can just drag the stop loss down, you can adjust it, but we're going to go more in detail about this next week. And I have set my take profit down here, and my take profit, as you can see, is $150. And why did I choose this level? As you can see, I'm not going to move my cursor down because I'm going to have that window pull up. But basically, we can see that the take profit is set at 150. We have horizontal support where the price horizontal support, also where the price crossed the moving average up. And once again, if my stop loss is 50, my take profit is 150, this risk to reward ratio is 1 to 3. Woohoo! And then this second scenario is basically also it can happen that the market is moving in a flat or in a sideways range. More of like sideways, up and down between a level of resistance and support. And here we can work with a 1 to 2 risk to reward ratio. So this is, once again, this is a sell trade. This is times 10 multiplier. I do believe this was Bitcoin that I was looking at yesterday. And basically, I entered a sell trade right here because it bounced from resistance. And I've set my stop loss at minus 60, which is slightly above the the last maximum, above this last peak, this spike. Now we went over candlesticks and explanatory what exactly they mean in our previous stream, so don't miss it. And I have set my take profit slightly above the last minimum, which is $120. So this is a risk to reward ratio of 1 to 2. Now, I just want to remind you guys that, the trade amount and also our risk to reward ratio, we have to realize it. We have to and stick to our plan. You can't just enter the market and throw all your money in and set your stop loss somewhere and take your take profit somewhere else, because we have to have a plan. We have to have an understanding of how the market works, and these things that we are advising, that we are telling you about, is things that really should be followed and is followed by profitable traders on the financial market. Now, I am watching one trade here. Let me just go ahead and switch to the platform, and I'm also going to switch my camera off so that there's no... Oh, there we go. I disappeared. So that we're not lagging, just in case. I'm looking at this currency pair on Euro JPY. This is a 1 hour time frame. So basically, this is the Forex platform. These are our parameters on the right-hand side. This is where you can switch the multiplier. Remember, 50, 100, 200, and 500. This is the commission that I mentioned earlier that you can always see prior to opening the trade. And so basically, the situation that I'm looking at is on the 1 hour time frame. And what I'm looking at is I have this level right here. That was previously acted as support, then acted as resistance, and now we're breaking above it. Angie, how did you get this level? Always check some higher time frames, and basically what I saw, this is that bottom level that we were just looking at. This was, no, the bottom one. Basically, I checked back in history, and it's always interesting to me, why did the price stall here, or why is the price reversing from this level? Because it has to be some kind of support, or on the upside it would be resistance. And we can see this bottom line, this acted as a support level, a very low support level, back in April of 2017. So this means this is why the price has basically, well, it actually moved even lower, but now it's working with this level. And what I'm seeing is basically we had a downtrend. The price has moved above the moving average. and it's now trying to break above this that 2017 support level. It acted as resistance, and now we're breaking above. I was just watching it for a few hours, and I do see I was kind of hesitant here because it kind of dropped down to the moving average, so I'm still watching it. But I like it. I like it because it moved up. I have rejection of lower prices, and it's using it now as support again. Very interesting for me. Another level that I have up here, which actually coincides with my 200 moving average, which is that long moving average. This also coincides with this cluster right here where the moving averages have crossed. And once again, if we switch to a higher time frame, to like a daily time frame, and we go back in history, we can see that this level also acted as support. So it's a valid, whoop, I just moved it. Let me go ahead and switch back. Let me adjust it down like this. Okay, if I switch back to my hour time frame, so this is potentially where the price can reach. Now, of course, we are going to monitor where the price is going to reach the 23.6, and I do hope that the price is going to break the level up and possibly retrace to the 38 and 2, and maybe even higher to this level right here. So what are we going to do? Just a quick little recap. I have close to $8,000 on my account. $240 is approximately 3% of my account balance. Using the, I'm going to use the minimum multiplier because, well, this could be a small retracement. It could reach the 23 and 6 and move. We could possibly even move sideways. So once again, I'm going to minimize my losses, and I'm going to use the minimum multiplier for the time being. And I'm going to enter a buy trade. So I click on buy. What can we see? We see that our stop loss is all the way down here for $240. I'm going to go ahead and move it up to slightly below this moving average. So if the price starts moving in the opposite direction, I would potentially only lose $30 of my $240. And I'm going to set my take profit. It's not very clearly visible where it's located, but if I set it to basically around the 38.2% Fibonacci level, my gain would be around $75. Now, this is not a ideal situation of a 1-to-3 ratio, but it's close. And I can actually even set my take profit to slightly even higher to that horizontal trend line and the 200 EMA for a higher take profit. But take profit is very beneficial whenever if you need to go somewhere, or if you're not going to be by your computer. It means that when the price reaches this level, the trade is going to close and take and basically collect the profit. Versus if you're not paying attention, if you leave your computer and it reaches this level and then starts to move back down, then we lost our opportunity to gain our profit. So my friends, let me go ahead and do a little full screen, my friends. Hi, I'm back. So quick little recap. Money management is about knowledge and understanding the risks involved, and then using this knowledge to minimize our losses and maximize our profit. We need to have discipline, and this is what I mean when we have to stick to our plan, stick to our strategy. So basically, discipline is very, very, very important in trading, and of course, a kind mindset. So don't forget to take breaks. Once again, if you lose more than 6% of your account balance, then you need to turn off your computer, take a break, and then reanalyze your mistakes, reanalyze your strategy, see what happened, basically like that. Don't be a shark and don't be a piranha. Stick to trades from 2 to 6% of your account balance. If you're a beginner trader, then start with 1% from your account balance. And always use your stop loss order, and we recommend using the 1-to-3 risk to reward ratio. Once again, use a higher multiplier if you have a good signal and if you are confident about the trade, and use a smaller multiplier if you have doubts, or basically a lot of times you want your stop loss to be further, so you want to have a smaller multiplier. For example, if you have your trade open for multiple days, so you have to take into consideration different basically like news releases, and we'll talk about that more on swing trading and position trading. So it's going to be very, very, very interesting. Let me go ahead and remind you guys about I can't show it here. Our promo code for this week is SAFE and then the number 34. This will add plus 30% to any and all to any deposit made. It works until next Monday. Plus 30%. And of course, please make sure that you are subscribed to our YouTube channel. Please give me a like if you enjoyed my stream, if you enjoyed the webinar. Of course, join me next week and all the following weeks. And don't forget to leave your comments below this video. And we are going to choose a random winner next week on Tuesday, May the 12th, and give out a risk-free trade. Let's see here. Deepak Nishad. Angie, I can't control my emotional greed when I trade fixed time trading. Well, this is something that we definitely have to work on. Maybe you should possibly try working on a demo account, and once you build up your discipline or stop this, I don't want to say greediness, but yes, that can be very harmful to your account. So definitely work on it. Let's see here. Cartoon animation. I'm not sure what that smiley means, but I do hope it's just waving at me. Other channels of Olymp Trade don't provide English caption or English subtitles to understand their webinar. I'm not sure what you mean. Do you mean like our analysts that are on different languages? Like we have Olymp Trade Indonesia, Olymp Trade Brazil, Vietnam. And do you mean their captions in English? Please kindly clarify. Review creators, emotional trading is the biggest enemy. Yes. Our psychology and once again our emotional state is very important. It's important to be calm, to be collected at all times. And once again, if you are losing control, if you realize that you are getting greedy, or like for example, if you a lot of times, if you lose, this is why I think the 6% comes in. If you lose more than 6%, then you need to take a break. This is because a lot of times when you have a loss, what you're trying to do are your following trades. You're not trading with the aim to trade and to analyze the financial market. What you're doing is you're trading to make back your losses. And that is a mistake, a psychological mistake. By the way, we have a fantastic playlist on our YouTube channel about psychology. They're short videos, but they're to the point, very explanatory. So definitely watch those. And by the way, Deepak Nishat, I highly advise you to watch those videos as well. My friends, I do see that everybody is okay. Wait 1 second, Angie, madam, how to use the EMA 1348 and 200 in Forex. That is actually what I have displayed on my chart. Whenever you are entering, basically on the bottom left corner, let me go ahead and switch back for 2 seconds. This is exactly what I'm using on our in my trading, 1348 and 200 EMA. I went over the moving averages in our technical analysis stream, so don't forget to watch that. But we have the slower moving average, which is the 200 EMA. We have the midterm moving average, which is 48 EMA, and the faster moving average, which is 13 EMA. Whenever you enter your moving averages on the in the indicators tab, it's going to automatically be set to 10. But you can click on this little pencil and you can adjust the period, and also you can adjust the different colors. And basically, the way that we can use it is that whenever the price crosses the moving average, is a good signal. Whenever the moving averages cross each other, they provide signals. And also, we can use the moving averages as a target area of resistance and support, which is kind of basically where I've set my take profit. My friends, I thank you so much for joining today. I'm running out of time a little bit. I could spend hours with you chatting, but once again, thank you so much for joining. Don't forget your promo code. Don't forget to leave your comments below this video. Give me a thumbs up. And my friends, I will see you next time. I will see you next week. Have a great day.